Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Let's run the numbers. Bitcoin is currently trading at 33,067, down 3.13%. Ethereum trading at 2027, down around 5%. We notice the stablecoins USDC, DAI, USDT, BUSD. They're currently red. That indicates that money is flowing from the stablecoins back into the crypto market. When it's green, it means the opposite. If you're a new viewer, welcome to our little community. I'd just like to let you know that everything I do for you is free. Twice a day, 7 days a week, I share my experience as a full-time crypto trader. Everything I do is free, so therefore please be aware of scammers. Let's check out Bitcoin's technical price action. I was saying yesterday in the last episode that I felt what would happen was that Bitcoin needed to gain some fuel, to gain some momentum to push through this $35,000 mark. That's what happened so far. We're holding up very well in terms of this support, and we've got a lot of structural support at the 32,414 mark. If we get a technical violation, we can expect that support to break and it to be recovered very quickly. If it does, I don't really get the feeling that that is happening. I just wanted to share this with you. Bitcoin is currently trading at 33,068. It has support below at 32,834, resistance above 33,588, and the key level in the sand really is this $35,000 mark. Really, Bitcoin is just seeking to gain enough momentum to push through this 35,000. We need to check the true trend of Bitcoin to see what side of the market we need to get on. So let's do that now. I'd like to share Rule 704 with you. Use knowledge, not fear. This is a really important rule in life, not just in trading and investing. When we use our knowledge, we can bypass fear. We can act courageously because the absence of fear is really knowledge. Many people in the community are getting a little bit concerned. I would just like to explain this. When you sell, somebody is on the other side of that trade. Who is buying? It's a good question to ask yourself. Fear, false evidence appearing real. It's a heck of a motivator, fear. It's really important to understand that people exist inside their comfort zone. We're happy, everything's going well. We don't need to act. We don't need to be motivated. We're just happy. When we get into the fear zone and the news and media can put us there easily, that fear is all about making us act. What typically happens when people act on fear, they cause the very thing that they don't want to happen. Then we move into the learning zone. If we get far enough with persistence, we can move into the growth zone. This is really the nature of life, to move from comfort into growth. We're always seeking to grow on this particular channel inside our community. It's a very growth-orientated community. We're also a very disciplined community. We understand that putting money down on anything is like putting a part of your life on the table. You need to protect it. Rule 174, the T-cubed method, is we look at the trend, we look at timing, and then we do the trigger. Right now, we're at the trend part. We're very disciplined in this community because we're disciplined, because we don't want to lose money, and we want to be more of a financial blessing to ourselves and those we love, and create intergenerational wealth. Rule 1112 is all about determining the true trend through the KS process. That's a very definitive step-by-step process that we use to determine the true trend. Let's get into it. It's always helpful to know what part of the economic cycle we are in, especially economies throughout the world. We can see here that we're in the early stages of recovery. China's reporting that it's a bit later in the stage, but most of the other countries are reporting around this particular area, early stage recovery to recovery. Let's have a look at Japan. Early stage recovery. What does this mean? It means there's a long way to go. We're just getting there. We're just sort of emerging from the darkness that the COVID pandemic wreaked. Things are getting back on track. Of course, we have the Delta variant to worry about, and that could be a setback. We need to keep a really close eye on that. That's a potential black swan. But as I've mentioned many times before, the economy is pretty much set up to withstand Delta. As a race, human beings are incredibly innovative. They understand how to meet challenges and how to solve them head on. And we've done a pretty good job of that, working from home where we can. All sorts of technology has come to the forefront. We will meet this challenge as a race and prosper. When people are new to trading and investing, and I understand many in the community are, they get really worried. That's money you're putting on the line. You could have worked your entire life to trade or invest with that money. Peter Lynch was an incredible fund manager at Fidelity. He said far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in the corrections themselves. I'm putting this here because I need to keep reinforcing this into you. Decades ago, when I started trading, I didn't have this. I had to find it all out for myself. It's a very hard journey filled with enormous pain. If I had have known this, I would have been so much better off. That's why I'm sharing it with you. Just like Bitcoin moves the entire crypto market through its fingerprint, the US market accounts for over 50% of all the money that goes into stock exchanges worldwide. That means we have to pay particularly close attention to it. You can see how disproportionately overweighted the US stock market is. And this is from January 2021. 56% for the US, 7%, 7.4% for Japan, 5.4% for China, UK 4%. It shows why we have to pay a lot of attention to the US market. The US markets move the global stock markets. There's an enormous amount of psychology in investing and trading. We always have to see what is there, not what we think could be there. For example, in this particular picture, there's a little bird here. This looks like another bird, looks like his friend, his mate, but it's not. These are just leaves, but it looks like a bird. There's twigs and leaves. Here on this side, we've got this tiger just chilling at the bottom of that tree, and it looks like a tiger's face up there. But really, it's a tree, and at the bottom, it's a tiger. We need to look at economic, financial data and see the reality here and here, not make believe a reality through spurious correlation. It's really important we don't jump to conclusions. We need to collect probabilities. Let's hop into the US markets and see what is cooking there. We're in Q2 earnings season. Refinitiv estimates a greater than 65% increase on earnings quarter on quarter. That's very good. In order to understand the stock market, we need to understand that earnings drive upward prices in stocks. A lack of earnings drives them down. There are, of course, exceptions to that, but it's really important to understand earnings play a critical role in the stock market. JP Morgan Chase and Goldman Sachs are reporting. There's also data on the inflation rate and retail sales coming out. Now let's look into inflation rate. That's pretty important. I love to share my sources with you. So let's look at the Federal Reserve Bank of St. Louis. This is the 10-year break-even inflation rate. You can see how it's coming up. It's just almost forming a bull flag here. Now, let's have a look at some other inflation data from Fred. This is the 5-year 5-year forward inflation expectation rate. Now, what are these little guys here? What's that? Let's see if we can figure that out. They're actually symbols that we can include in TradingView. I've got a link to TradingView. They've got a free version. I suggest you use it. It's fantastic. You see that particular little ticker? We put that in like we would put in a ticker for Grayscale Bitcoin Trust or Coinbase. It's just the same. Now, what do we notice here? So the June survey of consumer expectations, the median inflation expectations over the next 12 months jumped 4.8%. It was quite a bit of a jump, which is the highest reading in the history for a series that goes back to 2013. We know also that the Fed minute meetings that we analyzed in previous episodes, the recovery goals have not been met. They're keeping up their funding. The Federal Reserve Chair, Jerome Powell, will go to Congress Wednesday and Thursday to share his views on inflation. But let's try and get ahead of Jerome. What is happening here? You notice this yellow line is the price for Bitcoin. I always superimpose this on every chart so you can get a feeling for the market. Remember, we always have to assume that there's no correlation until there's overwhelming probability of one. That's really important, or else you can act in a way that goes against your portfolio. But we can see quite an association between the 10-year inflation rate and Bitcoin. Let's look at the 5-year. What's happening there? Yeah, there is an association for sure. Let's look at the 5-year forward inflation expectation rate. There's a divergence here. Yeah, it's following fairly well. What do we see? Inflation is good for Bitcoin. Prima facie, on the face of it, increasing inflation is not going to hurt Bitcoin. But we really need to collect more probabilities than just looking at a couple of graphs. I love to research for you, so any chance I can do research, I really, really love it. Let's have a look at how the Nasdaq is performing now. Why don't I just change this back to candles so it looks a little bit more reasonable? The reason I couldn't do candles is it looks like this on the inflation rate. I wanted you to see what the trend was. Okay, so when we look at the Nasdaq 100, what we're seeing is a really, really good support. I've mentioned many times that the news is going to say the end of the world is coming as the Nasdaq retraces to its long-term support line and then resumes back because earnings are quite good. Even if there is inflation, these earnings are fantastic. It may come back to the top of this line. Let's go a bit more conservative and let's say it comes all the way back to support. As it does, the news stories will be one of doom and gloom. It's all over. The markets are crashing. We can't say anything other than this is normal price behavior. Price is always moving in a wave, going up and coming down, going up. Of course it's got to come down. I've just drawn a couple of lines in here just for fun because I think that's probably where it's going. If it comes down from here, it's about a 7% retracement. If that happens, don't worry about it. It's all healthy. Let's look at the S&P 500. Again, we know the underpinning engine of the economy is chugging along in early stage recovery. It's looking good. If this retraces back to its long-term trend line, fine, nothing to worry about. But oh boy, the news stories, media outlets are going to cry that the end of the world is here. The Russell 2000 made an incredible jump up. It's consolidating. If it gets weakness as a knock-on effect of the Nasdaq and S&P 500, it will recover with them when they do. So again, nothing to worry about. Dow Jones is in a strong channel. This is a secondary channel that I've drawn here. It's a clone of that trend line to there. It's all looking good. It's excellent that we look through the Bitcoin-orientated stocks, especially GBTC, still under resistance. not far away from resistance. It's kind of basing here at the moment. QBTC, the Bitcoin fund in Canada, just following Bitcoin's price, you can see Bitcoin consolidating here and QBTC consolidating as well. You can see Coinbase has broken from this resistance and it's going up. If crypto was collapsing, these things would not be happening. These stocks are more prone, and ETFs are more prone to downward price momentum. We can see ARK support line over resistance looking good. Let's have a look at MicroStrategy, showing a little bit of weakness here. That's a truth. So we always have to call out what it is. White is white, black is black. I'm just going to call it out as it is. Over resistance, consolidating, a little bit weak here too. I think it's really important to know that these are not as large as the other ones. GBTC, QBTC, Coin, ARK are very large. These are smaller in terms of market capitalization, but they're all pretty much moving in the same direction. If we look here, over resistance, turned to support, going up. That's Riot Blockchain. Marathon Digital Holdings, we can see this support line is holding. Just because it's under doesn't mean it's the end of the world. In I guess you would say, strict technical analysis, any violation of a trend line is a counter trend move. That will make you broke. It's really important to use them as a guide and not a rule. Hive Blockchain coming down. We're seeing some weakness. It's important to be aware of this, but I wouldn't call it out as a potential problem at the present time. Everything is looking good. Okay, we see coming up to support for Bitfarms Limited, away from that resistance. That's okay. Still in trend. We can see Argo Blockchain. It's over resistance and consolidating. Everything is good so far. Nothing really calling out anything other than normal price action at this particular time. Let's have a look at gold. Gold is coming up to resistance, just testing that resistance at the moment. It's not got over it just yet. Let's have a look at silver. Silver performing well above this support line. Fresh air is always a good sign. What about volatility? Volatility is declining. When you get massive spikes in volatility, that generally means you're in for a bit of a stormy sea. We don't have that at present. Okay, let's look at the dollar. This resistance line was turned to support, retested, and it's retesting this resistance line. Not doing so well. It's getting rejected from it. Let's look at the 10-year Treasury note yield. Okay, we can see the yields returning to that support. Let's have a look at the 30-year. Yeah, it's got above that support. Let's have a look at the Treasury bonds. They're coming down. Still above resistance, and there is a support line there, so we need to keep our eye on this. Transportation. So think about this. If the Delta variant of COVID closes the world down, what do you think is going to happen to transportation? It's going to take a shock. That's why we're looking at it. Everything so far, so good. That's why we look at defensive sectors. So utilities is another defensive sector, just bubbling along. If there's anything else that you would like me to cover off, please let me know. I'm always happy to support the community in any way I can. Look at the airline sector. Weakness in airlines, we go back to COVID-19. We know what happens. They close up shop. Retracement, sure, but back to a level of support. Let's have a look at oil. What's happening with oil? Just on its trajectory, just hugging that support line. That was crude. Let's look at Brent. Brent, same thing. It's just as is. It's continuing to increase. Sometimes it's really important for us to zoom out. If we look at the compound annual growth rate, the CAGR, this is the CAGR. What it says is S&P grew by 13% per year for the past 10 years. Gold grew by 1% and Bitcoin by 118%. You notice all of these percentages look pretty fair. Crypto is a really, really good investment, and you can see just traditional ROI is looking very good. We must always be aware of being faded out by short-term movements and keep in for the longer term. That's really how you make the big money. Rule 209, institutional is not retail. We're very much about creating an institutional mindset in this particular community. We're not interested in the retail mindset. The retail mindset is dominated by fear, dominated by greed. Those things, fear and greed, will have you buying and selling at the wrong times. Institutional is very cool, calm, and relaxed. We crunch the numbers. It's the way to go to protect your wealth and grow your wealth. For example, if we look at the technological adoption curve for the internet and crypto, we can see crypto is growing more strongly year on year than the internet ever did. And we know the internet industry became one of the world's most profitable industries. Crypto is set to do the same thing. Let's check out our progress on the KS model. The KS model is a crypto technical trading model based on institutional price psychology. We are currently in the bull market psychology segment of this bull run. After each halving, there are 3 segments: bull market, bear market, consolidation. Halving, bull market, bear market, consolidation. Halving, bull market, there will be a bear market and there will be a consolidation. We're about 50% of the way through this bull market currently. Many retail YouTube channels are saying the bull market is over, it's all done, all finished, and consolidation will be starting. Okay, everybody's entitled to see the bird that's not there. Like this. Unfortunately, the retail mindset will lead people to buy at the top and sell at the bottom over and over and over again until they are broke. I do not subscribe to the retail mindset for you as a community member. We're here together. I'm here to protect you from that thinking. That thinking is disastrous, but we have to back these words up by fact. So let's crunch the numbers. It's really important to compare the same psychologies. A bull market is sunshine. A bear market is darkness. We never compare sunshine to darkness. If we do, we cross psychological boundaries and violate the mathematical law of consistency. If we do that, we'll come to erroneous conclusions. So it's really important to stay in the same block when we analyze things. We see at peaks this kind of behavior. This is the number of transfers to exchanges across all exchanges for Bitcoin. You notice this incredible spike to the exchange. This is the previous peak, the 2016 cycle peak. If we go back to the previous 2012 peak, which is the blue sun, and we just zoom in here, we'll see that these increases in transfers are all a sign that the particular peak has been reached. There were 2 peaks in this 2012 blue sun cycle. This was the top. So zooming out, what do we see here? Is there a peak? No, it's exactly the opposite. We've got a long way to go. I think what happens is many YouTube channels just prey on people's emotions. That's why I started this channel. As a trader with many decades of experience, I saw retail traders getting decimated by incredibly bad advice. I wanted to do something about it. That's why I started this channel. I do this twice a day, 7 days a week, to help people such as yourself to think more institutionally and less retail. That money you're putting on the market is your life force. You can't afford to lose it. If you're new to the crypto space, one of the best lessons you can ever learn is that peaks in crypto are marked by euphoria. You see this blue area up here, that's euphoria. The red area down here is capitulation, which means surrender. Tops are hammered in with euphoria and bottoms are hammered in with capitulation. That's really important. Now, where is the euphoria here in the current price? It's not there. We had an excess liquidity blow off because of all the stimulus in the market. That's all. That's what this particular correction is about. It's not a bear market at all. It's just a correction. This is the nature of crypto. Let's have a look at reserve risk. We go back to the previous peak and we see the reserve risk was in the red zone. We go back to the other peak, 2012 cycle peaks, the 1, the 2, we see reserve risk entered the red. If this was all over, we would have been in the red or very close to the red or through the red, but we're not there. We're very close to the green. Again, that's another probability that we're just getting started. I'd like to share Rule 138 with you. All investors become traders. You're an investor, you buy, you just became a trader. You're an investor, you sell, you just became a trader. I've seen so many professional YouTube stations buy at market. It makes me cringe. That is not the way professional traders work. They layer buy, like dollar cost average. They layer their buys in lines at support always. They're very, very disciplined people. It's really important that you become disciplined. You're putting your life force, your money into the market. Just back it up with the knowledge that will help you. Let's have a look at stock to flow deflection. We see up at the peak, we notice this red area. I always say you don't have to be the car maker to drive your car. You don't have to be an engineer to operate some electrical device. You just need to know how to switch it on and off, or to drive it, to turn left, accelerate and brake. This is like these charts. We could dive deeply, and I will do videos that dive very deeply into these, but we're looking for causality. We're looking for strong associations that we can use all the time, not sometime, basically all the time. What we see in the current area is the green line is down here. Stock to flow deflection is very, very low here compared to up here. What does it mean? It means basically we're nowhere near the peak. That's the important thing. We're just collecting probabilities. Let's collect some more. The Bitcoin realized cap hodl waves. If you look back to past cycles, you might notice these red mountains. I call them claws. There is one here, another one here, another one here. There are 3. You notice here, there is one here, another one here, another one here. Let's go to our current cycle. We notice 1. We've got a long way to go. Really, knowledge overcomes fear. A lot of people call it courage, but it's just knowledge. If you know where things are heading, you can just sit back. You don't have to be courageous. Being knowledgeable is the key. Let's look at one more, the Bitcoin hash ribbon. What do we notice here? We're trying to be predictive. We're trying to get something that works across different cycles. If you notice, this was the peak of the Green Sun 2016 cycle. Here, there was a lot of white space to the left and a lot of white space to the right. At that peak, that particular peak there, it hammers in the high. And from there, the bear market begins until capitulation occurs in this red zone. This is a capitulation zone. Very important to understand these. Again, the high of the 2012 cycle, white space to the left, white space to the right, hammered in a hash ribbon at capitulation. Now, let's go to the current price performance. we see we're just starting. There's no big wide space to the left, no big wide space to the right of that peak. We're just getting started. A lot of people on YouTube, they sell fear to get you outside your comfort zone, to make you want to buy something. Do you know what I'm selling? Nothing. Absolutely nothing. I just want you to help yourself. I want you to save your money. I want you to be a blessing to yourself financially. All of those things. Fear is not part of the equation. Knowledge is. Just to wrap everything together with a bow, really, fear is false evidence appearing real. If you have knowledge, you don't need to worry about entering the fear zone. Learning zone you should live in. I don't believe anybody's comfort zone should be exempt from learning. Learning and growth, learning here and the growth zone there, that's what we focus on as a community. The more you grow, the more you learn, the more you earn, the happier and better are your relationships, the happier is your work life, the more powerful your study is. Everything improves with learning and growth. I would just like to say, if people are trying to cause you fear, you should put a question mark on those people. Why are they doing that? Because they want to get you out of your comfort zone in order for you to buy something. I don't like that way of living. I don't like seeing people manipulated like that. That's why I started this channel. Really, if people are saying everything is bad and you're seeing thumbnails of people screaming and death, skull and bones and etc. and markets crashing, that's just clickbait. That's not helping you. Maybe they're shilling leverage trading links, and leverage will wreck and destroy you. This community is all about protecting you. If you would like to protect your friends, your family, please get them to come and pay us a visit and look through the content. A lot of people are getting into crypto, and I'm afraid they're going down a path which is full of fear and very little knowledge. As a former stats lecturer, first and second year, I really love to share knowledge. Episode 93 will dispense with your need to buy indicators. It will also incredibly increase your knowledge of how to read a chart. This one is really, really good. Please have a look if you would like to. There's another one, episode 104, how to read crypto thumbnail charts. It's really cool. We go through 100 cryptos and kind of give you a helping hand on how you can get an edge in the market. Everything that I do for you is focused on one goal: to help you to learn more, to transfer my knowledge to you, and also philosophies that will really save you an enormous amount of money and help you to be more of a financial blessing to yourself and those you love. I hope you found the content useful. Everything I do for you is free. Please be aware of scammers. I do these videos to assist you to be more of a financial blessing to yourself and those you love. Let's have a look at the Ethereum tokens. That's a bit of fun. Please say hi and let me know where you're viewing from, and if you have any questions. I just started a Facebook group. If you would like to be part of that, I would love you to come over and join us. I'm not a Facebook user. I know nothing about Facebook, but I think it's pretty cool to chat. And so you're very, very welcome to come across. If you would like twice daily updates, 7 days a week on price movements in the crypto market, please subscribe to YouTube, follow me on Twitter, and come across to the Facebook group and have a chat. That's always nice to chat. Crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.